Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.
Good morning. It's Wednesday, August 5th. I'm Phil Streibel, Chief Market Strategist at Blue Line Futures Metals Minute, episode 716, and checking in on the markets overnight in today's risk events. Your precious metals and stock futures edging higher here in early trading following yesterday's explosive rally and today's explosive rally in the precious metals market. So traders, they are going to be watching for more employment data with ADP private payrolls for July coming out, where consensus estimates here are adding 75,000 jobs last month. We'll also have the S&P Global Services PMI and ISM non-manufacturing readings for July also due out. So looking at that overnight price action in the precious metals, and we talked about this with the team, many of our clients yesterday, the particular setup that we're having here coming into this overnight session. So you start with the gold market here, December gold bouncing up 1.38% to 42.09, the high of the overnight session, 42.3850. Yesterday, I talked about in the metals minute here, a potential move on up to 41.75, which now we have seen, and then how a break above that could target 4,200, which we saw happen in the overnight session. So traders, they do want to see a close over this 4,200 level because that could be the beginning of a much larger move higher on up to 4,400, and slightly higher from that is that falling wedge pattern where gold futures have been trading in since that peak in February. If you do get the metals edge, if you register in the link in the description below for the navigating the week ahead, you will get the metals edge chart pack here, which we send out, which has that key level support resistance, the biases in that market here, as well as the tactical ranges that go on throughout the trading session. Now, if you look at your first level of support on December gold sitting at 40.74, that's going to be your Monday low here, followed by 4,000 at psychological level, and then the double bottom here, 39.65 and then 39.50. So from a swing trading perspective here, gold now looks very constructive with some of those momentum indicators like DMI plus over DMI minus here, and some of the key moving averages beginning to turn higher. You look at the retail flows, they're still out of this market. They cut 13,000 troy ounces of gold yesterday. I believe they were chasing some of the momentum with a lot of the FOMO here, with the NASDAQ up over 1,000, the Dow Jones, the S&P 500, the Russell, all exploding yesterday. You could see how that rotation takes place. Year to date, the percentage change here on gold ETF flows is down 2.3%. Now you're checking on silver here. This is one we talked about yesterday as well, with overnight futures rising to 62.18, rising up over 2%, breaking through some of those key levels as well. Similar to gold, futures are looking much more constructive here on the charts on a trending basis. In the retail flows, they added 227,000 troy ounces to their holdings yesterday. So retail starting to come into this market here. You had a lot of the miners pushing up here, and these futures contracts were just setting up for some of those key breakouts on the charts. The gold silver ratio dropping down from 70-1 here at the start of the week, now to 68-1. And then finally copper, and this was the fuse in the match that lit this rally here, with September coppers unchanged on the session as some of these outside metals play catch up. Yesterday we did see platinum futures up over $130 an ounce. So September copper unchanged at 664, and yesterday we discussed those drivers on the copper markets. The tariff trade is still the story, with over 200,000 tons hitting U.S. ports in July, with the biggest monthly inflow and shipping data going back to 2014. Supply getting squeezed everywhere else, with LME stocks here at a 5-month low, with that metal shifting over to China, and the spread structure here confirming the steepest backwardation here since January. Remember what happened in January in the silver market with those LME, those lease rates. We're going to want to start watching that as well. In the big picture here, copper up around 13% this year, with mining supply harder to come by, AI infrastructure demand building, and dips continue to find buyers. Now you turn to the U.S. equity markets, because that was the momentum trade here yesterday. The Dow Jones up about 200 points, the S&P 500 up 0.3%. You also have the NASDAQ futures just slightly lower, coming in and out of positive territory here. You go to the earnings front here. Of the 372 S&P 500 companies that have reported so far, 87% 87% of beating those analyst estimates here for EPS forecasts. Only 10% have missed. Now, what we want to watch here with the fall in the oil market, the decline in the dollar index, and the back off in 10-year Treasury yields, 2-year Treasury yields, is those expectations here for an interest rate hike here, according to the CME's Fed Watch tool. Well, the odds for the rate hike here drop down to 56.7%. 2-year Treasury yields edging lower to 4.2%. 10-year yields 4.63%. The yield curve flattening just a bit, but has been quite inverted here for a while here as far as steepening higher and sitting at 43 basis points. So you go over to Europe, you go over to Asia here, European stocks advancing for a third straight day, strong earnings, lower oil prices, lifting the benchmark here to a fresh record. In Asian trading, those stocks rising to the highest in a month, and the MSCI Asia Pacific Index gaining 2.3%, boosted by TSMC, SK Hynix here, and Samsung. So if you want to get access to the metals edge here, some of the key levels, the tactical support, resistance, as well as those charts that we lay out here, register in the link in the description below. And don't forget to like and subscribe to this YouTube channel here. Help us grow this channel out. We're adding a lot more videos, a lot more content to it, and we're going to have some deep dives into the metals, specifically into gold, specifically into silver. And if you register, you'll get a lot of that content that we put out here. So if you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.
Futures trading involves a substantial risk of loss and may not be suitable for all investors. Therefore, carefully consider whether such trading is suitable for you in light of your financial condition.